Hello and welcome to the News Express, exclusively brought to you by Business AM, Nigeria's fastest growing financial and business newspaper. I am Chukunonso Modi. Now, we have interesting stories hitting the front page this week. Let's take a look. Now, the big story, CBN's return to orthodoxy, analysts see recession, negatives ahead for households, businesses. Now, sub-headlines, FG banks to benefit from 150 basis point rate hike, Naira to gain strength, cost of borrowings to rise. Now, second headline, it says Nigeria SA lead as Africa's BNPL market to explode to $85.4 billion by 2028. Now, sub-headlines, the 30 Group reports CAGR of 47% from 2021 to 2028. Another sub-headline, Nigeria's BNPL sees 62% growth, South Africa 57%, and the rest of Africa 35%. Now, you should also check out finance and investment with the headline Bullish NGX attracts 1 trillion naira from investors. Now, also look out for Executive Knowledge series which says of heroes wearing capes and willpower. Really interesting one. Definitely check out commodities and agriculture as well. Time to up plantain production. A really insightful article. And lastly, Visionary Voices, which says US spanner in Africa's COVID-19 will. Now let's bring in Philip Isakwa, the publisher of Business AM, to help us make sense of the headlines. Good morning, Philip.
Yeah, good morning, Onso. It's good to be back again. There are so many interesting things to look out for in the economy, global and local. Let's get started.
Yes, definitely. So many interesting things. Now, let's go straight to the first headline, which says CBN's return to orthodoxy, analysts see recession, negatives ahead for households, businesses. Now, last week we spoke about the MPC meeting and the projections as well. It was expected that the committee might be tempted to make a token hike of 25 basis points. But then the results came out and it had raised the policy rate by a high 150 basis points at 13%. And yes, this is in line with expectations of analysts, if not more. But before we go into the benefit or risk, were you surprised with this result, Mr. Philip? This is the first time in nearly 6 years, if I'm not wrong.
Yes, we made the call last week. We were talking about it. We said there's quite a lot going on in the local and global economy. Mm-hmm. That the CBN was not likely to shy away or run away from what was happening in different parts of the world. We said inflation was all over the place. We said inflation was making central banks across the world, to rethink policies. Whether we're talking about the United States, where the Federal Reserve Bank has been responding to inflation threats, whether we're talking about the UK, England, where the Bank of England has been responding to inflation threat, and we called it a la carte. That inflation was had presented an a la carte.
Yes,
to the Monetary Policy Committee. Mm-hmm. They had no place to run. But we were not. Money analysts were not expecting the basis points high. We made a call of 25 basis points. Mm-hmm. Some people made a call of 50 basis points. But nobody thought about 150. But we have gone back to history, and we went back to history, and we saw that the last time that this central bank made such a high leap in terms of increasing the monetary policy rates, was a 200 basis points. So it's not that it has not been done before. It's just that 2016 was 6 years ago. That they did the 200 basis points. But that 150 was also what within the range. When they decided to move, but not so many people expected as much as 150 basis points. But they were responding. They were responding to the circumstances that they felt that the economy was in, and so people are beginning to react already, and we just have to wait and see.
Yes, definitely. We have to wait and see. I must say, I was really surprised, because we were talking about how, this is not the first time they're having MPC meetings, and each time we'll expect this, but they do the opposite. So this really took me by surprise. Now, yes, it is what we expected and even more, like you said. But analysts still have concerns. Now, for one, they opine that the ripple effect this recession would have across the board would rather see the economy more impoverished, as the CBN seem to be sacrificing economic growth in pursuit of low inflation, is according to the article. Now, what do you think?
Absolutely. I mean, CBN had maintained, all the time that we had expected the CBN to move, with regards to what was happening in different places, in the world, with regards to the central bank's response to different economies. We didn't get any movement. They always came back, to surprise us, and this is the first time that they would respond in accordance to what was happening in other parts of the world and what analysts were expecting, but CBN had been a pro-growth. They've been responding with regards to wanting to grow the economy. Not that this isn't about growth anyway, but they had taken a stance, that we should continue to stimulate the economy, for growth to with regards to the peculiar circumstances that the economy faced, with regards to the tightness of not having for instance, foreign direct investment coming in, and not having money within the economy. So they had hoped that in taking those decisions that the economy will be stimulated, given a low interest, keeping the interest rates within a particular level, to ensure that banks were continuing to fund certain developments within the economy, so that had informed their decision, but this time they had decided to say let's look at what's going on, especially again with the peculiarity of Nigeria, because again you must not forget that this is an election year. We've been hearing all the things going on at conventions, or delegates, whether they're electing delegates or electing flag bearers or whatever. We've been hearing what's been going on. So they expect that money will be pumped into the economy, and if inflation has taken root, like we will always say, found confidence within, and anticipate that in an election year it could become even more serious. With the money hadn't, you will think that money hasn't started flowing in, but they have a right to anticipate. They had a need to anticipate that if the money starts flowing in, like what we've heard throughout this weekend, this past weekend, and what was likely to happen in future, then they needed to respond, So it's not that they are not pro-growth anymore, it's just that the circumstances have changed, while while still being pro-growth, they needed to also be take precaution, as to inflation, what inflation could do to the economy, because inflation can have a devastating effect on the economy in terms of even if you are chasing a pro-growth policy, the response is actually with regards to inflation. The inflation right now is serious, in terms of the percentage. It's remained double digits for so long, but it's the rise in April. It was such that they needed to respond and anticipate what might happen following what we're witnessing with regards to to the elections or primaries that are taking place in the country, and the elections that are likely to come up next year.
Yes, true. I agree. The inflation is really eating deep. So as much as this has its risk, it's really good that it raised the rate. Now, speaking of this, I mean, analysts have pointed out the risk that this would bring. But then I'm sure there are also benefits as well, right?
There will be benefits, of course. You've had that. I think you have investors who will look at the different money market areas. Particularly you're looking at bonds markets. Where interest rates are likely to go higher. You have the banks who are likely to sit pretty with regards to high interest in terms of how this is transferred to customers, and not savings customers, but people who go out to take loans and take whatever they take from the banks. So the banks are likely to have some comfort in this, to find some comfort in this, but if we have what they call the fixed income market, where if the fixed income market reacts in terms of increasing rates, for investors, I mean, for instruments, for investors, then you're likely to see investors begin to move in that direction. I don't know how much of that will affect the equities market, but you're likely to see that investors are likely to make a move, to look at fixed income instruments and see how comfortable that will be for them. But clearly, generally, you'll be speaking at the impact it might have, it will have, the negative impact it will have on different other things.
Okay, hopefully the good outweighs the bad, because I know we are saying that the negative impact is more than, the benefits, but then they're not the only one raising rates. I mean, in the global market too, they're also raising their rates, so it can't be all bad.
Yeah, I mean, globally, their rates are, they're raising rates, because they want to tackle inflation.
Yes.
Inflation can be very devastating. Sometimes we don't see how this have a general impact on the economy as a whole. But in more system, where you have call it well functioning economies, where the markets are, you could see what's going on, from the indices that the markets churn out. Those economies tend to respond quite quickly, because inflation has an impact. In England, in the UK, inflation is having a ripple effect, with cost of living. The what's it called, the exchequer of the UK has released last week he released some what you call palliatives, with regards to how much they could put into the economy to cushion the effect of cost of living that has risen very high. Sometimes we don't see it in the response, that you should expect, with regards to the impact of inflation. You don't get to see it in Nigeria, but in different parts of the world, in the US, you will see some responses, that will be focused on what inflation is doing. It's not a general blanketing. It's what they're trying to do now is to try to see that they mop up money from the economy, by raising interest rates, so that you don't have too much money within the economy, to try to ensure that because typically what you have is to think that inflation is being driven by what's it called, having so much money in the system, and so they respond like that, without looking at the bigger picture. Inflation is quite a devastating thing, not just with the pockets of you and I, of individuals, but how companies are able to operate within the economy, not just the general whether the federal government taking certain decisions, but also the way the economy should function without hindrances. And inflation can be very devastating, and most central banks tend to respond like that. So not only in Nigeria, but so if Nigeria is joining what's going on, what you will probably see is that the responses are incremental, with not one sledgehammer, at 150%. You probably will have the Bank of England will respond 25 basis points, 50 basis points, or so in the US, you see incremental 25 basis points responding, in accordance with what they see going on within the economy. But if the Central Bank of Nigeria or the Monetary Policy Committee thinks that they should kill these ants and stop, so that you can stop disturbing everybody, you'll see that 150 basis points will just be thrown down. But the impact that will have on the economy or the different financial markets will begin to tell, and then things are still going to happen. People are saying that don't expect that this will be the last one. There might be something else that will come up before the end of the year. There might be one more raise, because the central bank has already taken a position to say it's going to fight inflation. It's one of the biggest worries. The central bank governor, Godwin Emefiele, we alluded to this when he read the communique. We talked about this last week. We said inflation is a major function of the central bank on keeping inflation, and then we talked about the target that the central bank has always had, which is within single digits, that it has never achieved, as if he was listening to us. He said he responded by saying that inflation is one remit that they would need to work on, and that they could not look the other way while inflation was ravaging the economy. And we'll wait and see what will happen. The different markets will respond. The bond markets are already responding. The different instruments are already responding, and so many things will happen. And we'll see what will go on. So we expect that we will see. Let's wait and see and hear what will happen.
Yes, so definitely we'll wait and see and hear what happens. Now moving to the second headline, it says Nigeria SA leads Africa's BNPL market to explode to $85.4 billion by 2028. Now, Nigeria and South Africa, which is the continent's two largest economies, with a GDP value of some $805.38 billion, are in frontline position to lead a growth projection as Africa and the Middle East region prepare to explode growing financial space known as buy now, pay later loan market. Now, this is touching on $85.4 billion by 2028, and it's according to a BNPL index report just released by Lafferty Group. Mr. Philip, please, can you expand more on this BNPL for us?
It's a couple of weeks or 3 weeks ago, we were on this subject with looking at a global outlook. Talked about buy now, pay later, that is catching on globally. We exclusively got this report from Lafferty. I was sitting down with the chairman of Lafferty over the weekend, discussing in somewhere in London, discussing this matter. What exactly was going on. Buy now, pay later, that is catching catching on as a result of the growth in fintech and other the banking industry.
Mm-hmm.
So this report does narrow down to the numbers with regards to Africa and the Middle East. Last time when we spoke about this, we talked about it in terms of the global trend that we sought to look at how Nigeria and Africa could benefit. But now the numbers are out, with regards to this love party index that came out that we got our hands on.
Mm-hmm.
So what they're saying is that we are likely we see an explosion, that in 2028 will reach $85.4 billion. I know, and that with regards to Africa, that Nigeria and South Africa are going to take a lead in this.
Okay.
The Nigerian BNPL market is likely to see a 62% growth, within this period. South Africa is likely to see a 57% growth, and then the rest of Africa will see a 35% growth. The BNPL market is simply where people buy stuff. Non-so you go to you have a BNPL account.
Mm-hmm.
You go to the market, you buy, and then you pay later. The good thing is about it is that you don't have to. The interest, there's no except when you do not pay up. So people are keen into this. So you go to a supermarket in Lagos, you go to a supermarket in Abuja, and you have a BNPL account. You buy the stuff, whatever you need, and then because you're expecting your money to come in before the end of the month. It's just like some credit card that were done in the past.
Yes.
So a credit card will allow you to buy some stuff, will not need to pay the interest on the credit card so long as you pay off the money before the due date. But if it's only when you do not pay off the money, that you are penalized you are charged the interest. With so many things, especially with Islamic finance, we have Islamic insurance, or now that where if you had an account with an Islamic insurance firm, at the end of the year, even if you don't make any claims, the profit that they generate will be shared amongst all of you, that are members of that company. So that is making. The result is showing that because of that, it is catching on in the Middle East, in Africa. Where such financing resonates with people, and Nigeria and South Africa are going to take a lead in this regard. And where you have the value of what's called nearly $1 trillion. $1 trillion. $1 trillion, globally, that we are looking at the African explosion reaching 85.4 billion, and Nigeria taking the lead. I said Nigeria and South Africa both are garnering the bulk of investment in fintechs, to place them in pole position. And it is fintechs that appear to be leading the way on with regards to BNPL, so that's what the Lafati report says, and they've made a projection, so annual growth was called cumulative annual growth rate of 47% between 2021 and 2028, and then that over the same period, that Nigeria is going to, it's a loan, it's a loan, it's a loan based on what you purchase, as even though it's a loan, it's only when you do not meet your payment that you're likely to find yourself, I don't know whether to call it in trouble. It's not trouble, but you're likely to pay the interest. So So it's something that is huge that is happening. The fintechs are taking space in Nigeria. There are so many of them. In Africa, EasyBuy, Credpol, CDK, Nigeria. And there are so many of them that are already taking position and are making this thing happen. So that's what this market is all about. Looking forward to see how the explosion, will benefit you and I and everybody in general. But it's something it's space that you need to watch out for.
Yes, we're definitely looking forward because, like you said, it's an easy way and to take the load off so many people. I mean, they do it abroad. I've not heard of anybody going to jail. I mean, there are some cases where some people go out of hand, but then if it can thrive there, then it can also work here. So we'll be on the lookout for the benefits, opportunities that it's going to bring to Nigeria and the rest of Africa at large.
Absolutely, especially because Nigeria, with its population, the awareness that you find, Michael Afati expanding on this even over the weekend, had told that Africa is increasingly becoming a consumer society, and that banks and fintechs are responding. It's a response to the fact that Africa and Nigeria in particular and South Africa, are becoming a consumer society. Consumer society in the sense that being more organized in terms of their spending, and in terms of where they make purchases, and in terms of how they make purchases, So because you will have seen the growth in the supermarket system. Let's put it that way. Different from how we used to shop in the past. Go to Onyembu market or whichever market, Jankara market, as they will say. But now things have been more organized. So they are being put in place. So this system will have the banks and the fintechs, being the ones, you go to these places and you have your cards, your you have BNPL accounts, and then you spend your money in these supermarkets, with a view to paying, and it allows you to pay instrumentally, So it's not so you find something you need, and that is you go to a supermarket and something is fanciful or it's available on sale at that time. You don't have to say, oh, this money I don't have the cash. We are used to offsetting, paying off our whatever we want to purchase immediately. Because as a cash-driven society, even if you wanted to buy land, you have to make sure all your money is complete before you approach whoever is selling the land. But what we are seeing with this system is that there's an allowance for some it's a loan, but it's not a loan in the sense of a loan. So it's a loan that will allow you some breathing space, so you can instrumentally pay it off, or pay it down, so long as you don't default, you probably wouldn't even be charged much.
All right. Like I said, this is a really good one, and we're looking forward to see how it thrives in Nigeria.
Absolutely, Nonso.
All right. Now, thank you, Mr. Philip. We'll definitely see how the stories develop this week.
Yes, Nonso. Have a great week ahead.
You too. That was Philip Isakwa, the publisher of Business AM, Nigeria's fastest growing financial and business newspaper. That's all for now. Stay tuned for more.